In late September 2024, the U.S. dollar reached a 14-month low against major developed currencies amid expectations that the Federal Reserve would embark upon a sustained easing cycle, potentially bringing the Fed funds rate below 3% by the end of 2025. However, this narrative quickly reversed in early October as signs of economic acceleration emerged, raising speculation that the Fed might need to delay its easing cycle. Now, the shift in sentiment drove interest rates higher across the curve and propelled the dollar to gain an average of 6.5% between October 1st and December 4th. While broad domestic factors primarily drove currency movements during this period, certain currencies faced unique challenges. Now, the Australian dollar emerged as the biggest casualty, plummeting nearly 8% against the dollar by early December. Analysts largely attribute this decline to concerns over the potential of a U.S.-China trade war, which could significantly impact the Chinese economy and, by extension, Australia's economy, given the strong trade ties between the two nations. Now, the Reserve Bank of Australia has shown growing unease over the Aussie decline. Governor Michelle Bullock recently emphasized that core inflation remains too high to consider near-term rate cuts, signaling a more hawkish stance to support the currency. Now, looking ahead, two key data releases could further influence the U.S. dollar versus the Aussie dollar pair. The U.S. employment report on December 6th, followed by its Australian counterpart on December 11th. Now, the CME Group offers 3 different size currency contracts to match traders up with their preferred risk tolerance. Today, we're going to be using the micros in these examples. If a trader believes the Australian dollar could continue lower from here, they could sell the December micro Australian dollar futures contract at 0.6434 and target a move to the 2023 lows of 0.6290. Now, a stop for this trade can be placed above at 0.6514. This trade can make $144 if the target is reached and risks $80 if you're stopped out of your level. Now, if a trader believes the Australian dollar could rally from here, they could buy that December micro Australian dollar futures contract at 0.6434 and target a move back to the November highs of 0.6680. Now, a stop for this trade can be placed below at 0.6284. This trade can make $246 if the target is reached and risks $150 if you're stopped out of your level.